I saw a dream that wouldn't end. Over and over again, I repeated and corrected every mistake. But before I knew it, I lost count. I died over 100 million times. And yet there was still a place I wanted to reach. A wish I wanted to protect.
Alright, bet. Today is the 28th of April, being a Tuesday. And in relation to the economic calendar, we had no high impact news today. So I'm just going to be taking a look at the two trades that I took during the AM session. So I took shorts and I took longs. So we're just going to take a look at that. So as per usual, jumping into the daily to get a grasp of what is going on and what I was initially paying attention to. So we're seeing, okay, Monday opens right here. And what I've taken a notice of is the fact that price action is being very shy around that 27,500 level. And you can treat this level as if it's consequent encroachment because it's the midpoint between what we're layering out in quadrants, being that 27,000 round figure level as well as the 28,000 round figure level. But I'm saying treat it as consequent encroachment because you're going to see the same signatures as if it was the consequent encroachment of an imbalance or the equilibrium of a range or the mean threshold of an order block. But I was paying attention to this imbalance. Now, during going into today's session, we're going to see it later on in the time frames, but we completely just dumped overnight session. And I actually did take shorts last night during the Asia session, but I'll touch on that when we get there. So yeah, that's what I was paying attention to. And then the devil's mark. So from the Friday's trading, we left the devil's mark, and I posted a review. And I mentioned that this devil's mark is automatically going to serve as a drawn liquidity going into next week's trading, being this week's trading. And that's what we're seeing here as of right now, price action gravitating towards that devil's mark. So we haven't yet engaged with it, but we're gravitating towards it. If we are to not engage with it during today's session, simply just going to look at that like the engineering of sell side again. But taking a look at the hour 4. So we have that 1800 candle cracking correlation with the previous day high. So ES engages with the previous day high and Nasdaq fails to follow suit. I have a standard deviation anchored here. So from this candle's high down to this candle's low, we have that -2, -2.5, -4, -4.5. Now, I'm not really a fan of this standard deviation, but I wanted to have a move that I can project down towards sell side to see where price action is ultimately looking to draw towards. But naked eye, without these standard deviations, I am paying attention to this range low. So from last week's trading, we have this whipsaw candle. We engaged with the high. The low is still intact across all assets, all correlated assets. And then, yeah, that is it. In relation to the hour 4, there really hasn't been much that I've been paying attention to. But the other thing I was looking at would have been this devil's mark right here, that 1800. I don't have it marked out. Reason why being is because it's a new week opening. No, it's a new day opening gap. So can easily tell with the gap. But yeah, the devil's mark that resides right there. I'm paying attention to that devil's mark, paying attention to that range low. And yeah, that is really it that I was paying attention to on the hour 4 in relation to intraday. So dropping down and taking a look at the hour 1. So we have the 1800 being right here. And with that 1800 candle, we see ES engaging with its previous day high, Nasdaq failing to follow suit. And from here, point of inception is established during the Asia session. So this is where I actually took shorts, and I attempted to take shorts. I actually got taken out of the trade before this entire move unraveled out. But we have this deliverance down towards sell side, and this is all occurring before a New York AM session. So Asia has started. It's established a point of inception. It's invited for that sell side delivery motion in the form of expansion as well. Asia does expand towards sell side, and then we have that midnight opening. And what we end up seeing is that midnight opens and it forms its high inside of this imbalance right here. So it forms its high inside of this imbalance. And even so, I don't even have a standard deviation, but you can grab a standard deviation like this and utilize that to project it down towards sell side. So you end up having your -2, -2.5 right here, and then most definitely a standard deviation on a lower fractal that you can look to utilize right here. And then the -4, -4.5 was projecting for this imbalance that resides right here, in which this standard deviation ended up getting exhausted. But we have that midnight opening delivering up into this imbalance, this SIBI that resides right here, and we end up seeing this midnight opening candle just snapping right back down, and then it's followed with very heavy sell side deliverance. We see London session right here, and London actually doesn't do all that much until we end up coming to the close. So we have London consolidating for a little while, but then we end up having the close and we end up inviting that sell side delivery motion. And the importance of what we had done was displacing below this imbalance right here. This imbalance was once utilized as support during all these segments of price action right here. And what we've ended up doing here is during this 5 a.m. candle, we end up having that closure below it. We're then going to look to utilize, we're then going to look to see this imbalance being utilized as resistance, in which we end up seeing 6 a.m. and this would be the opening of your hour 4 candle. 6 a.m. delivers up towards buy side, engages with this imbalance right here, but not only does it engage with this imbalance, what it's really engaging with would be this low right here, and this would be the low of your previous day candle, being Monday. Yeah, that's Monday. So yeah, it's coming up, engaging with this imbalance as well as engaging with the Monday low, and then we end up seeing that heavy sell side deliverance once again pre-New York AM. And when moves like this are occurring pre-session, it can invite for very sloppy AM conditions. Now, in all fairness, today was not sloppy. Today was actually very clean, in my opinion. I found today very easy to read. I would have liked to maybe see a couple different things occur, but today was relatively easy in relation to, navigating price action. But we have that deliverance down towards sell side, and we see 9 a.m. delivering up towards buy side, engaging with this SIBI right here. Now, I'm also paying attention to this bullish order block that was on the left side of the chart. So we see these series of down close candles delivering into this imbalance, and then we have a closure above it. This is your formation of an order block, and then we have the closure above it. Now, the only thing was we don't actually end up utilizing this order block. So we don't end up utilizing this order block, but I was paying attention to this order block because if I'm to project it out in price, we end up seeing how respective price action is once we had ended up closing below. So we don't even have no closure above this would be your lower quadrant. Yes, you don't have any closure above our lower quadrant, and then we see that 10 a.m. comes, delivers up, engages with the mean threshold, and then we end up having that deliverance down towards sell side, coming back down, closing back below this imbalance, and yeah, inviting that sell side delivery motion. But that is quite it for the hour 1. So that was what I was paying attention to, staying on the hour 1 for quite a while now, because a lot of the framework was coming from what the hour 1 was displaying today. And then dropping down and taking a look at the 15-minute. So there really wasn't anything that I was paying attention to on the 15-minute, to be quite honest. We have 1800 opening right here. We see that deliverance up towards buy side from the previous day's trading, standard deviation utilizing the bodies right here, and we have that -3.5 being utilized. Point of inception occurs right here, but there's not really a clean there is a standard deviation, but it's a left to right circumstance right here, so you'd be anchoring it like this. But even so, it's already been exhausted. But the -2, -2.5 gives you another standard deviation, and this is the standard deviation that I was using. So I was using this standard deviation, and we have that -2, -2.5, -4, -4.5, and this is where we end up turning back around before our 9:30 opening. So in relation to the 15-minute, there really was not anything I was paying attention to, other than the fact that, okay, we have the equilibrium of the previous week's range, and that is actually the only thing I was paying attention to. And the only reason why was because it's in alignment with that 1800 opening from Thursday, and that is where that daily devil's mark resides right here. So yeah, that is basically it in relation to the 15-minute. Now we can actually jump down and look at the trades. So we have the 9:30 opening being right here, and what we end up seeing 9:30 do is immediately deliver down towards sell side. Very heavy. In relation to what we were doing initially, this 9:30 candle is very dramatic. And this is just sending the crowd the complete opposite way. The crowd has seen price action dump all during the overnight session. All during the overnight session, they've just seen price action fall, 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 fall. 9:30 opens and it dumps instantaneously. They're looking to get on side with it right off of that 9:30 opening. We end up seeing price action fail to continue the sell side delivery motion. And if price action did continue delivering down towards sell side, engaging with this low, I would have been open to taking longs, but we don't end up seeing that. We end up seeing price action coming down, engaging with the consequent encroachment. So this would be the consequent encroachment of a regular trading hour gap. So it'd be this 15-minute regular trading hour gap. We engage with it. We see how the bodies are being rather respective. Deliverance up towards buy side. We have the inversion of the 9:30 candle fair value gap. But more importantly, we also have the first presented fair value gap for the AM session of Tuesday printing right on top of this inversion. And this is a very clean long position, most definitely. Could look to scale off or collapse the entire trade being right here. But we have the engagement with the inversion as well as the first presented, deliverance up towards buy side, accumulation of orders once we end up engaging with this high, and then we continue this buy side delivery motion. Now, I didn't have a standard deviation that I could look to project to see that, okay, I'm going to, look to align myself with the price action here. I don't always need a standard deviation in order for me to determine a point of terminus as well as inception, because I think I've mentioned this before, but standard deviations are essentially just like stabilizers. You really don't need standard deviations in order to engage with price. All they do is simply just add conviction to either engaging with a trade or collapsing a trade. So if we end up engaging with the -4, -4.5, it can give you conviction. It can further give you conviction to collapse your trade right there if it's in alignment with other PD arrays. Or if we engage with the -4, -4.5, it can give you conviction to enter a trade if it's in alignment with, for one, narrative, as well as there are other PD arrays and there's a clear drawn liquidity. But I didn't have a standard deviation that I could look to project up. There was a 15-second that was right here, but ultimately wasn't using it, wasn't paying attention to it. What I was paying attention to was the 27,250 level. So this was what I was paying attention to. So when we come back onto the daily, we have all of these round figure institutional levels right here, 27,000 being right here. And that is what I was paying attention to when we were coming up and engaging with price action, because what I'd taken a notice of is on the left side of the chart, we have this imbalance right here during a 30-minute window. We have this imbalance right here, and we end up seeing this imbalance displacing down towards sell side, engaging with this low, but it's also displacing below that 250 level. And this imbalance was never returned back into. It was utilized as a breakaway gap to take price action out of this lethargic delivery motion to then go into this spooling motion down towards sell side. So I'm paying attention to that 27,250 level. The signatures are present. The 250 level has been engaged with, cracking correlation. Next thing I'm waiting for is a change in staying delivery, in which we end up having, as well as the inversion of this imbalance right here, because this imbalance helped the move up towards buy side to engage with that 250 level, as well as present that cracking correlation. So the moment we have the inversion of this imbalance, I'm into the trade already now. And it's funny, because I'm actually not quite sure why I wasn't actually in this trade off of the 15-second fractal, because there was more than sufficient enough framework, but I wasn't paying attention. It didn't even cross my mind. But even so, either or, it all works out the exact same, because 15-second offering that change in staying delivery, it's going to unravel out to that M1, in which we end up seeing here. The only difference it makes, me being on the 15-second compared to the 1 minute, is simply just risk to reward. I'm ultimately going to be risking more on the M1 because the range is a lot larger than the 15-second. But the moment we have the inversion, change in staying delivery, I'm in the trade, and my stop loss was initially at this high, but then I took a notice of the fact that, oh yeah, we ended up forming our change in staying delivery. So our change in staying delivery resides right here. I took a notice to the fact that, oh, we ended up forming our change in staying delivery with the formation of an imbalance. And whenever we do this, our stop loss isn't required to be put at this high. It's safe at the bodies of the order block, so you can put it right there. So I ended up moving my stop loss to right there, and trade is delivering down towards sell side. We deliver down into an equilibrium of this range, and then from that deliverance from the equilibrium, I end up getting taken out of the trade. And if I'm being completely honest, being taken out of this trade made me feel a type of way. It made me feel a type of way, and the reason why being is because it's not because I was wrong on the idea, it was because I managed the trade ineffectively. So I ended up managing my stop loss and moving it to this candle's high. And the reason why being is because this candle is the candle that ended up forming our change in stay in delivery. We had the imbalance right here. I didn't want to see price action come all the way up and move very lethargically like it did here. I didn't want to see that. I wanted to see price action, maintain that sell side deliverance as we were seeing down here. Maybe not in that low resistance manner, but at least maintain it from the engagement with this imbalance as well as the change in stay in delivery. But we failed to see that. We come deliver up, engage with the imbalance, change in state. We return down, but we move very lethargically during the segment of price action right here. And then we end up coming and taking me out. And I end up getting prematurely stopped out of this trade being right here since my stop loss was right here. Now, initially, the reason why this made me feel a type of way is because initially my stop loss was up here. My stop loss was up here, and this would be your upper quadrant of your order block. And when it comes to the management of your trade, and especially stop loss management is very important. And with me, during my journey as a trader, as I was developing, one thing I genuinely had a very big problem with was stop loss management. And it wasn't a case of, oh, my stop loss is nowhere to be seen or my stop loss is incredibly big. It's when and where and how to effectively move my stop loss as price is delivering in my desired direction. Because I had a lot of times where I'm in a trade, it's delivering in my desired direction, and what ends up occurring is I manage my stop loss rather aggressively. I might have moved it to break even, I might have moved it to a place where it holds no sense of validation to, put your stop loss there. And what ends up happening is I get prematurely stopped out. And from this premature stop out, the trade ends up delivering in my desired direction, just like I had initially planned for it to occur. If I'd left my stop loss where it initially was when the trade began, I would have been fine. If I, knew back then how to manage a stop loss effectively, I would have been fine. And then from this premature stop out, a lot of things can occur because where your original stop loss was, if it has not been engaged with, you begin to question, was I correct or was I wrong on my idea? Or did I just manage my stop loss ineffectively? Now, obviously, during developing stages, I didn't know how to manage a stop loss effectively. So I don't even know if it was effective or ineffective managed. I don't know if me moving my stop loss is what saved me or I did myself a disservice by moving my stop loss. But what ends up happening after being prematurely stopped out, if I'm watching the markets, I stay there and I'm watching the markets and I'm seeing that trade deliver in my desired direction, I may end up going on tilt. Reason why being is because now I feel like I'm owed what could have been. And that is the wrong way to engage with these markets because the markets do not owe you nothing. The markets genuinely do not owe you nothing and you're not entitled to absolutely anything. The last thing you should be feeling is entitled to a amount of money that you feel like you should have made because it's just going to lead to bad things in terms of over leveraging or over risking or over trading X, Y, and Z. But with that trade delivering in my desired direction, I'm thinking to myself, I'm like, okay, how do I get back in this trade? And this is why I have come to that realization of what and who I am as a trader in terms of how I look to engage with these markets. I struggled a lot in terms of finding continuation moves. I could only make sense of moves where it's reversals. Those were the only type of moves that I could make sense of in my head. Now, as I developed as a trader, I began to acknowledge that, oh, this is where I can get in for a continuation and have a valid stop loss, X, Y, and Z, da 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 da. But during developing stages, I couldn't see it. So I may be trying to get back into that trade. And what's occurring is, a lot of things could happen. You may end up winning or you may end up going on tilt. Anything can really happen at that point in a sense, It's fair game. Once you've lost all emotional regulation, you're not thinking with clarity and you're not acting out of alignment, at that point, I don't believe in luck, but you just have to be lucky at that point to either not blow all the funds in your account or to make money because you're not thinking straight. But besides all of that, long tangent there about the management of stop losses. So back on topic with the trade before the tangent, mentioning the fact that I was taken out prematurely right here. So once I was taken out prematurely, the first questions that come into mind was this a premature stop out, or was I wrong in the idea completely and we're going to continue delivering up towards buy side? So I'm waiting to see one of two things. I'm waiting to see either price action come and engage with this high again, potential point of inception occur, or I'm waiting to see signatures of price action not willing to deliver up towards the buy side. And the first thing I instantaneously take a notice to is that the candle that ends up taking me out, we end up closing back under the mean threshold of the order block. And then the next candle delivers above the mean threshold, closes back under it, followed with a series of down close candles. We end up closing below this imbalance right here, and then we end up closing below this imbalance that resides right here. So then I'm saying to myself, okay, I don't think that I was wrong in my idea completely. I simply just managed my stop loss rather ineffectively, because for one, my stop loss ultimately could have stayed here. And last, the only other place that stop loss can get moved to would be above the upper or lower quadrant of a PD array. That is the safest. And the reason why being as to why it's the safest is because you can't see it when we're looking at the M1 fractal. When we drop down into a 15-second fractal, we see this leg that presents itself here, and this is what I was questioning as to why I wasn't in the trade here, but honestly it doesn't matter. But we see this leg that presents itself here, and we have this imbalance. We also have the inversion of this PD array, but we have this high. This high is engaging with this imbalance. This high then becomes an intermediate term high, and you don't want to see price action breach this high. It would be a signature of order flow switching. So we end up having the upper quadrant of the bearish order block, and we see that the upper quadrant just resides above this intermediate term high. So the next valid stop loss I could have had was right here, but honestly, to be quite honest, it doesn't really matter. I was stopped out prematurely due to an ineffective management of my stop loss, and once I'm under the acknowledgement that, okay, I ineffectively managed my stop loss here, that is the reason why this trade resulted in a loss. The next thing I look to do is how could I have managed my stop loss in a more effective manner, which is basically what I've just gone through in terms of, okay, my stop loss could have stayed here, or we could have moved it to that intermediate term high, which we know is just around that, upper quadrant of the bearish order block. If one doesn't have access to these lower fractals, then it's simply just place it above the upper quadrant and just trust the algorithm. That's basically it. So as we're delivering down towards sell side, we're seeing efficient utilization of this imbalance right here. We're seeing, SIBIs being presented, devil's marks being presented, X, Y, and Z. We're just delivering down towards sell side. I'm seeing re-entries, but I'm just not getting on side with it because, as I was saying previously, as I was developing as a trader, I simply just struggled to wrap my head around trying to get in on a move as a continuation. I always wanted to be at a point of reversal where nothing is behind me. I didn't like the idea of, oh, I'm going to enter this trade right here and I have all of this price action right here. For some reason, my head just couldn't, I just couldn't wrap my head around it. But besides that, I'm seeing all of the re-entries and none of them are really nice in a sense. They're not offering a valid stop loss placement, and that was what I struggled with in relation to me as a developing trader trying to join in on moves on a continuation. I didn't understand where my stop loss would have to go. That's why at a point of inception, at a point of reversal, it's very clear, and it was very clear to me back then as to where my stop loss should go, right there, being either this low or this high. But during a continuation, if I was to perhaps end up getting involved in this move on this imbalance right here, so we have this bearish imbalance right here, if I was to get involved with this move, I know that, okay, there is a stop loss function where we can have it on the opening of the imbalance, we'd get prematurely stopped out again. And I'm thinking to myself, am I wrong in the idea or am I right? End up seeing price action dump. And all of a sudden now you're thinking to yourself, oh, you want to fries, bro, completely fries. But I completely struggled to understand that, oh, where would a valid stop loss be? It can't just be at any swing high. Like, there needs to be structure. I always understood that there needed to be a sense of structure. in this case, if I was to enter off of this imbalance, my stop loss would be valid here. Very small imbalance that resides right here. Can deem this an intermediate term high. You wouldn't want to see it breached. The next point of stop loss you could look at would be this high, and then the safest stop loss is all the way up here. The risk to reward is bleak. That is dark. Yeah, it's not even too risk to reward. There's no problem with this at all. Absolutely no problem with this. It's just, it's dark. But yeah, we have that deliverance down towards sell side. I end up engaging with price action again. Once we come down, we engage with the -4, -4.5 standard deviation. So we have point of inception, standard deviation projecting for sell side, and -4, -4.5. The PDRA that was in alignment with it would have been the lower quadrant of that regular trading hours. So if we go into the 15-minute, we're paying attention to this lower quadrant that resides right here. This would be your lower quadrant, and that was the PDRA that resided in it, and that's where we ended up taking those longs, which would have been, I think it was the 1045, if I'm not mistaken. Yeah, it would have been that 1045 15-minute candle. So price action comes down, delivers. We end up having this cracking correlation right here, 15-second change in sustained delivery, and I ended up looking to collapse the trade right at the new day opening gap high. So this would be, I don't know what day. I think it's Wednesday or Thursday. Let's just check. Yeah, so upon checking, the new day opening gap would be that Wednesday/Thursday new day opening gap. So I ended up just collapsing it at the high, as well as this high right here would have been the low of your 15-minute imbalance. So yeah, pretty much, just look to collapse it right there. And that is pretty much it for today's session. Not much. I don't think there's anything I'm missing. Yesterday, I actually did take a trade. I took a longs. I didn't touch on it, to be quite honest. I didn't even post the execution videos. I don't know if I'm even going to touch on it, to be quite honest. We're just going to, pretend I didn't take anything. But lastly touching, honestly, I could touch on this right here, isn't it? Yeah, I took longs during Monday, and it was right here. Yeah, took longs during the lunch session, actually. So I was just posting it into the Telegram, but took longs, and where did it collapse? Collapsed here? Yeah, collapsed it here. It was just before the lunch session ended. So yeah, it wasn't really anything too interesting. Very poor deliverance, nothing to go over. But yeah, the short that we took during the Asia session, to be quite honest, there's really nothing I can do here. It's just kind of one of them ones in a sense, where it's like, okay, it's just a loss that's been put in with the system. I can't think of anything I could have done in a sense. It's really just one of them ones where it's like, it's just a loss that is a part of the system, because my system isn't 100%. But even so, the system depends on the operator. But besides all of that, I ended up, oh, no, it looked like this. Yeah, I ended up taking the short here, and I actually arrived to it late. I should have been in this trade on this 2004 candle, but I ended up getting in this trade at 2006, and stop loss would have been right at this high. And yeah, I was looking for that sell side delivery motion that we ended up having during the Asia session, followed by London, as well as pre-New York AM. I was looking for a very hefty sell side delivery motion. All of the sell side stacked up on top of each other. It looked very pretty. It looked like a very nice drawn liquidity, as well as the fact that we had that cracking correlation with the previous day's high, ES engaging with it, NASDAQ failing to follow suit. And yeah, I thought maybe this was green. I thought it was, cash money type of timing. Not really. Just came and said, yeah, not today, bro. I honestly don't know what I actually could have done. I don't know what I could have done. It's kind of one of them ones where it's really for the book. Like when I'm looking at it here, re-entry is served at a later point in time. So this would have been your re-entry, and it would have been on the 5-minute fractal. It would have been on the 5-minute fractal. But you see, with NASDAQ coming up and taking me out, we end up invalidating the cracking correlations that presented itself right there. So if I jump onto a 15-minute chart and we go and take a look at that segment of price action. So initially, the cracking correlation was looking like this between the two, and then we end up having an internal cracking correlation at that 2000 candle. So that would be this one that right here that I'm referring to. So that is what the cracking correlation looked like on the M15. So then I was looking to, get that sell side delivery motion. I was looking for change in staying delivery to occur. Nice, clean standard deviation I could utilize to project down towards sell side, as well as the fact that there was a clear drawn liquidity being this devil's mark that resided right here. And what else? Yeah, that was really basically it. But with the 2000 candle coming and stopping me out, what ends up happening is we invalidate that cracking correlation with the internal structure right here that we're paying attention to. We end up invalidating it. So even so, I would have had no interest in this trade anymore. I would have had no interest in this trade. So after it came and stopped me out, I wasn't interested anymore. Yes, it can deliver for all I care, but no longer have interest because there's certain criteria that I'm looking for. Yes, there is that previous day high cracking correlation, but I'm still looking for internal structure to present itself. And internal structure does present itself. YM does the job, but we don't really like YM. YM ends up offering that internal cracking correlation at 415. So 415, YM comes up, engages with that 2000 high, that Asia high. And that is also where we have that 15-minute standard deviation that we utilize to project down towards sell side, where we ended up seeing 830 come up and reverse right here. But yeah, that is pretty much it, to be quite honest. That would be the Asia trade. There's really not much to it, just ultimately looking for price action to dump all towards all of that price action, as well as the fact that we evidently had the drawn liquidities that we could look for X, Y, and Z. I'm trying to think if there's absolutely anything else, but I don't think that. Wow, what the fuck is going on here? Oh, yes, 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 yes. Ethereum. Yes, so Ethereum, last time I posted would have been Sunday. I recorded that video on Saturday and got it uploaded on the Sunday. And what I was looking to see was a point of inception occur on the daily fractal for Ethereum for that sell side delivery motion. And we've had that occur. So I think it was yesterday. No, it would have been actually Sunday because I sent it into my Telegram at a very specific time. And literally at that time is when we ended up turning around, rolling over, and beginning that sell side delivery motion. But I sent it in that I'm looking to see price action begin to roll over now. And that is what has occurred. We've had that daily change in staying delivery, which I very much like to see. And we also have that as well on BTC as well. BTC has offered that that daily change in staying delivery, which is very clean. But yeah, this is simply just what I'm looking to see. I'd like to see price action come, close down below this, continue that sell side delivery motion. Tomorrow we end up having what is it, FOMC? Looking to see FOMC be utilized for an injection of volatility. Now, I'm not saying FOMC is going to just dump us all the way down, but it's going to give us that juice, in a sense, for price action to begin running. But yeah, that is basically in relation to Ethereum. That was what I was forgetting. But yeah, that is it for Ethereum and the Nasdaq. This is very ugly, to be quite honest. But yeah.